Welcome students to this video, the first video on order blocks, extreme order blocks. So let's go ahead and get right into it. All right, so in today's lesson, you guys are going to be learning the importance and purpose of extreme order blocks, where extreme order blocks are located in multi-time frame structure for both continuation and reversal trends. Identifying the structure properly is going to ensure that you are selecting the correct order blocks that are structurally aligned, that are going to be making new higher highs, new lower lows. There's only ever one order block that will be making new structure, and in this video we're going to be showing you the order blocks that do make new structure, which are extreme order blocks. How to further properly apply extreme order blocks in multi-time frame analysis for our best trades. Extreme order blocks are my personal favorite order blocks for several reasons. One of which, because they have the highest probability out of all of the order blocks. Now, you will realize going through this course, we are going to be teaching you all of the core concepts, but how I specifically apply each concept, and whenever I asterisk and italicize, something very important that I'm going to say is take what works, take only the highest probability, because that is the goal at the end of the day. That's how you're going to make the money you want to make, have that level of consistency, and starting with order blocks and structure is imperative before talking about anything else. Extreme order blocks traded alone will result in a drastically successful win rate. The goal at the end of the day is to not be perfect, but it is to make the most amount of money that we can and be very successful and confident in the analysis, already anticipating and understanding the outcome. And the beauty with our edge is that if we are on the wrong side of the market, if we do take a loss, we can always learn how we can improve for the next trade. It's not like there's any unknowns. You are going to know why you lose and what you can do better. So always learn from that in extreme order blocks by identifying structure, by identifying, the correct refinements. That is how you're going to exponentially increase your learning curve to success. So let's go ahead and get right into it. We're first going to be talking about extreme order blocks in continuation structure. All right, so conceptual understanding. What are extreme order blocks? More so in continuation structure. So extreme order blocks are the structurally supported order blocks that lie at the extreme retracements of all ranges, right? So if you are in a bearish or sell trend, your order block is going to be located at the 75 to 99% retracement of your previous lower high to your current lower low. This is going to be located within your 75 to 99% retracement of that. Likewise, for your buys, they're going to be located at your higher lows that make your higher highs. Now, they're present in both continuation and reversal structure and all types of trends, bullish trends, bearish trends, internal, all the above. And by mastering multi-time frame wave theory in your multi-time frame structural analysis is going to allow you to properly identify your correct extreme order blocks. All of your extreme order blocks must have your 4 core features. If you don't know what those core 4 features are, refer back to the first video on order blocks, the order blocks plus imbalances and the anatomy of them. Your highest probability order blocks, of course, are going to be your extremes. Will extremes always work? Nothing always works in the markets, but knowing when and why they work will be in a future section. So in a bearish trend, like we discussed, our order blocks, if we have a lower high and a lower low, and let's say this is where price currently is after making a new lower low to the previous lower low, your valid trading range, your TR, is going to be from your current lower high to your current lower low. Your order block is going to be located within your 75 to 99% retracement. Your order block could be all the way up here, literally almost breaking structure. It could be, at 70, above 75% of your entire leg retracement, but your extreme order blocks get the name because they're lying at the extreme retracement of price, the absolute and ideal place that we want price to come to maximize the amount of pips, the risk reward ratios, all the above that we gain from this. So inversely, for buys, our order blocks are located at the higher lows that make higher highs, still lying within that 75 to 99% retracement. Your order blocks are going to be from your previous or your current higher low that makes your current higher high. Price will make that retracement to mitigate the process of an order block being tapped. It's going to be mitigating your order block, to which then you're going to be anticipating new bullish structure, all assuming that you have identified the structure correctly. Now, not all extremes are valid. I italicized and bolded this so you know that there's a reason why extremes are the highest probability, but not all of them are valid. And you're going to be learning that in the next section. So this is how the ideal placement and areas that we're going to be looking for our order blocks, and they all need to have our core 4 features. You can go ahead and watch that video for a further detailed analysis, but in essence, all order blocks must have imbalance. All order blocks must have liquidity being swept. All order blocks must have liquidity lying before them, and all order blocks must be structurally supported or creating a very impulsive move. The market is attracted after a big expansion to come back down to the single candle before price took up. So if price is bullish, look for your higher low that made that higher high. It's a very logical area that there's going to be an extreme order block in. Same for sells, lying at your lower highs, make your lower lows for price to come back to, mitigate, and drop lower. So your applied understanding in a bullish continuation extreme, in a buy scenario, the first thing you always need to do before even identifying extremes is identifying your structure. If you do not identify the structure and you just say something is an extreme order block, Well, how do you know that it's an extreme? Because an extreme by definition is the extreme retracements of structure. So in this scenario, we see that we have a low, we have a high, higher low, we have a higher high. This higher low that makes the higher high, where is the order block that has imbalance, created that momentous move, and lies at the current higher low? Well, we see after this low makes that new high, where does price come back to? It comes back to our order block, our only order block, mind you, that is left at the extreme retracements of price, at our higher low that makes our higher high. Now, again, you always need to mark structure properly to identify the correct order blocks. So bullish continuations, you have a pre-existing bullish trend, you're simply trend trading, identifying your order blocks lying at your higher lows that make new higher highs. Now, likewise, bearish continuation order blocks are going to be inverse compared to the bullish. Your bearish extreme order blocks lie at the extreme retracements of your bearish structure, so they're going to be located in your lower highs. Structurally, we say that we have a low, a lower high, a lower low, a lower high, and then we see price make a new lower low. After this lower high makes our lower low, imagine a trend line being drawn that connects these two dots. Where's the order block going to lie? It's going to lie at the lower high, and we see the lower high that makes lower low. We clearly have an imbalance before the order block. We see the order block right here, and it is this candle, right? It is not the gray candle. It is the darker colored candle. Price comes, makes new structure, comes back to mitigate the lower high extreme. And of course, when you're confident in the structure, you're just going to be anticipating a new structural lower low continuation. Price comes up and mitigates it, and then makes that new structure. So another important point to keep in mind, your order blocks, the ratio of body to wick does not matter. It also doesn't matter what color candle the order block is. Some other people, some other traders say, oh, it needs to be this color, it needs to have this, it needs to have a very large body, it needs to have a sponsored candle, if you will, or, oh, it needs to mitigate 50%. This is all theory. None of that is true when it comes to order blocks. All of the specified criteria of the 4 core features of valid order blocks are, however, necessary for every single one. So this is the extreme bearish and the extreme bullish scenario. Practice it, memorize it, because this is how everything is going to be applied going forward when identifying your order blocks. Always putting structure first, looking at your extreme higher lows and higher highs for those continuations. Now at an initial glance, let's go to TradingView to see how we can apply what we just learned for our bullish and bearish continuations. When we're looking at TradingView, we're on G, we're on the 2-hour time frame, and we are now in mid-July of this year. The first thing you always need to do is identify your valid structure. So where is going to be your valid structure within this trading range, right? Your valid structure is going to be from your lower high to your higher low to your current higher high, but we need to backtrack and actually see where the structure is taking place. So we see that we have a lower high, a lower low. Price then successfully makes a new high after that. So we can see that there's some form of trend shift going on from, structure previously being bearish to now transitioning to bullish. After we've identified, now we have new bullish structure, we simply just drag a line to see where the higher high that would be necessary to be broken, and then the higher low that is the absolute lowest point after the previous high that ends up making a new higher high. So then we have a new higher low, we have a new higher high. Now after a new higher high, we then have a new higher low and a new higher high, and this is the valid trading range at the moment that we are going to be anticipating. We see that we have that higher low that makes the higher high. Where's the order block within this higher low that makes the higher high? Well, on the 2-hour, we can clearly see that this is the candle that caused the impulsive move to break structure. Now, again, some of you guys might be asking, well, why didn't you identify this higher low, and this higher high? Again, refer back to the multi-time frame wave theory and structural analysis. I know that's going to be internal structure of my larger time frame. So I'm ignoring that. That is not the main move. That is, this whole push did not occur right here. It started here. So we have that huge expansion, right? That huge push off. This acts as like a magnet that price has to come back to after price expansively makes a new structure. It ends up coming back to mitigate, and in this instance, you see that of this higher low to this higher high, it actually ends up coming all the way down to a 99% or so retracement, like we just discussed. As long as this low does not break, this whole order block is valid. It can just tap here, it can just tap the open, the very high point, it can come all the way down in between it, it can come in the middle. That's when we'll get to order block refinements later on in this section. So this is how we apply structurally supported bullish extreme order blocks on the charts. Now let's take a look at our bearish extreme order blocks and a bearish continuation. So over here, right, what do we see? We see that we are looking at some form of internal structure. We have a lower high, we are in a bearish trend, we have a lower high, we have a lower low, we have a new lower high, right? That makes a new lower low. So this is our valid trading range at the moment, where we see the lower high that makes a new lower low, and our order block is going to be lying at the extreme retracements of our current trading range. In this instance, we see it actually doesn't come up to 99% like the previous. It more or less comes up to an 80 to 85% retracement of the range. Now, where exactly is the order block? Again, this is the actual candle, because it is the candle that has the imbalance from this wick here to this wick right here afterwards. That is always necessary. If you do not have an imbalance, it is not an order block, plain and simple. Why? You might be asking again, well, why is this not the order block here? Well, because there's no imbalance. If there's no imbalance, look for the next candle that does have imbalance, which it is right here. So that is our extreme order block. And what does price do? It acts as a magnet. The whole push came from here, acts as a magnet for price to come back to mitigate. And after that, of course, we see price successfully mitigate our order block and then end up making our new bearish structure, right? So this is how we apply extreme order blocks in both sell and buy scenarios. My personal favorite way to approach order blocks is when they're in the trend, when they have all the core 4 features, as they are just the highest probability scenarios. So now let's go back to the charts and identify, or back to the presentation, and see the next type of structural extreme order block right now. It's time to learn about reversal extreme order blocks. So the extreme order block placement is not going to be changing. There's no new qualities, but the trend, however, will be changing. So now we're going to be identifying the extreme order blocks in reversal structure. So what are extreme order blocks in reversal structure, right? Where's the reversal structure? Well, compared to our continuation extreme order blocks, our extreme reversal order blocks lie at still structurally supported areas, but after a BOS has occurred. So it's the first area that a BOS occurs, indicating that there's some form of trend shift taking place, right? So specifically, reversal extremes are structurally supported OBs that still lie at the extreme retracements of a trading range, but in this instance, after a fresh BOS, still within the 75 to 99% retracement of the new leg, but the placement based on the structure is going to change a little bit. So in this instance, when we're looking to sell, we see that we have previous bullish structure from higher low to higher high, higher low to higher high. As soon as this higher high, or this higher low that makes the higher high is broken, we consider that, of course, a break of structure. It is an intent for price to reverse. Now, later on, you'll be learning how to know what a real BOS is, but for the time being, your extreme order blocks lie for sells at the extreme price of bearish structure that first occurs to make your BOS. So after the BOS occurs, we see that we have a lower high, or we have our previous higher high, we have a new lower low. After the lower low that breaks the higher low is broken, this is our new trading range. From this previous higher high to this lower low, we look for our order block at the extreme retracement of this trading range, the price to come up to mitigate it, and then reverse. Likewise, when we are in a previous bearish trend, we have lower low, lower high, lower low, lower high, lower low. As soon as the lower high that makes that absolute lower low is broken, we know that's going to be a trend change, an intent for price to possibly reverse. Not solidified, it's intent for it to reverse. After that break of structure happens, we see that we have a new now high that we're using the previous lower low within our bearish range to effectively break that previous lower high to make a new high. So now our trading range comes between this lower low to this high. We simply identify our extreme order block at the extreme retracement of price, and as soon as it comes to mitigate our order block, we are going to simply anticipate price to then make new higher high structure. So as far as extremes, these are the lowest probability extremes for the true nature that reversal trades are much riskier compared to trend trading. And what you're going to realize in the sections coming on is, if you've ever seen, well, I had a BOS and, I identified maybe an extreme order block already and it didn't work. Well, that's because it wasn't a true BOS, and you'll be learning that again within the next few sections. So not all extremes are valid, especially in this scenario, because it is always going to matter what's to the left. Specifically, when you see these types of setups, memorize that they occur on the internal timeframes of higher timeframe structure. So like we talked about in the multi-timeframe analysis and wave theory video, when price is shifting from the main trend to the internal trend, and we see that we have an internal BOS within a main trend leg, if that internal BOS then is counter trend, if you're looking for sells on the main trend and your internal BOS occurs, that tells you that you're going to have a pullback on your higher time frame. So that's what you're going to be seeing here for potential pullback opportunities. Likewise, if you're looking to sell, and let's say that the pullback is complete on the internal structure. After that pullback is complete, we know it will be after this BOS, because this internal structure would align with the higher time frame, so we can much more confidently take this position because it is aligned with the higher time frame trend. So just like we mentioned, what I've been saying is these are the lowest probability extremes. Just follow the higher time frame extremes where price is going to go. A BOS is only intent to reverse. It is a counter trend scenario. It is never a end all be all. It's not solidified. So please always keep that in mind whenever you see a BOS. That does not mean price is reversing, and there's much more to that. But we're going to be talking about that later on. Now the applied understanding. The bullish reversal extreme. When we're looking at structure and we see a bullish reversal extreme, that means that we had a previous sell trend, bearish trend, that has now shifted bullish. So we can clearly see here, the first thing you always do is mark your structure. We have a lower low, lower high, lower low, lower high, lower low. We see that after the lower low was made, we had a BOS in the opposite direction. So after the BOS was made, we then had the current lower low make a new higher high. And we're simply going to be identifying the order block that lies at the extreme area of our new bullish trading range. And of course, what you see, price takes its time, and it actually comes back to mitigate the order block. And then it runs away a little bit. And then it comes back into it even deeper, and then it officially makes that new bullish continuation structure. So why does this happen? Two reasons. One is your order block, while we prefer it to be mitigated once, when it comes deeper in your order block for a second time, that tells you intuitively that there's going to be a lower time frame order block within here that has been left unmitigated. So the only order block that we will ever know that needs to be mitigated, whether it's extremes or other order blocks, is the highest time frame. Never always choose the absolute refinement of an order block, and always zoom out to the higher time frame to make sure that you're not in an order block. For instance, maybe this could have made the new structure, the new highs. While that could have happened, you need to understand that had you just identified this one over here, this refinement, and maybe you didn't see this was the higher time frame order block, and let's say you were just stuck on the 5-minute. If you fail to acknowledge that this higher time frame order block was mitigated and then it just made a new structure, you'd be waiting for a move that would never happen. So always identify the highest time frame order block. So that's the bullish reversal example, coming from previous sells to new buys, identifying at our previous lower low for an extreme order block. For bearish reversal extreme is going to be very similar, inverted. In this example, we see that we have high, higher low, higher high, higher low, higher high. This higher high is what causes price to break structure here, indicating now that we have a new trading range from our previous higher high to now a new lower low. So we're going to be identifying the extreme order block from this high to this low. And after we've identified it, which we can clearly see is our order block right here, we see that we have a minor imbalance before. There's no other order block that's valid because this is the only one with imbalance before. And again, a quick note, initially there was an imbalance between this wick and this wick, but notice price came up and actually reduced the size of the imbalance. But this wick has not been covered yet completely, so the imbalance still exists. That's why it's valid. New structure is made, price comes back to the order block. Again, this ends up being, as far as a retracement, a 90+% retracement of our bearish range. Price comes to mitigate it successfully, and then price makes new structural lower lows. Key takeaways about our extreme order blocks. What are the most important points that we always need to keep in mind? 1, extremes are the highest probability order blocks with high win rate. If I had to encourage anyone to trade only extremes, just focus on extremes, none of the other order blocks. Just do that, make it mechanical, right? And that's it. Strongly encourage everyone to only use them. Continuation extremes are more probable than reversal extremes. Reversal extremes occur after a BOS, but a BOS does not 100% say that a new trend is going to happen. It's just intent. So if you identify the wrong structure and you just see a BOS and you identify an extreme, and let's say you're on the wrong side of the market from a higher time frame perspective, you can end up taking a pretty drastic loss, right? So that loss could be avoided by just trading in the higher time frame pro trend and identifying your continuation extremes. Extremes must have the 4 core features of order blocks to be valid. All of them do. All of them need to sweep liquidity, have liquidity line before them. That is a later section, and the second or third section of this core concepts course. After we identify the core 4 features, we need to ensure that the only order block that must be mitigated is the largest one. Let's say that you are looking on an intraday perspective, maybe a 1 hour, and you see your 1 hour order block. Even as good as it looks, always make sure, when in doubt, to zoom out, no matter how perfect it looks, because you might realize that there could be a 4 hour order block that price is already mitigated. And if that 1 hour isn't mitigated, you might be waiting for that 1 hour order block to be mitigated, and it might never get there. It might just mitigate that 4 hour, right? So like we just talked about in the previous slide, if you fail to understand that you always need to understand where the highest time frame order block is, you use that as a reference point, not to enter, but just to know that this is all price needs to tap, mitigate before going anywhere. It doesn't have to come to your refinements. It doesn't have to come to a 15-minute, a 30-minute. There's a 4 hour, an 8 hour daily order block and it tapped it. It does not need to go any deeper inside of that. That is a very, very, very important note. So always make sure to understand what the absolute highest time frame and the largest order block is, so you're never going to, wait for a move or a refinement that may never happen. We also discussed that price can mitigate order blocks more than once. It can come to an order block, mitigate it successfully, and then it can run away, like we just visited. But it can also come back inside of the order block that was previously mitigated. And in this instance, that occurs when there is a lower time frame refinement within our extreme that is left unmitigated. So like we just talked about with the 4th one, if you have your 2 hour order block and it ends up being mitigated and price runs away, that doesn't mean that it can't come back into maybe a 30-minute extreme you identified. So that is where we're going to be talking about that exclusively in our order block refinement section, but just something to write down in your notes, always be aware of, because at the end of the day, we're analysts and we need to understand the possibilities, and 4 and 5 are both the possibilities, right? You could just tap the higher time frame, run away, not come to our lower time frame, or it could come to our refinement after coming and mitigating the higher time frame. So extremes that 1 lie at liquidity and 2 cause major imbalances will not work. When we talk about liquidity, we will specifically address what we're referring to. But essentially, if you have an order block in extreme that is lying at just basic forms of liquidity from a basic understanding, equal highs, equal lows, it will not work because that will be targeted. If you don't know, don't worry. That will be covered extensively later on. The second thing, cause major imbalances. If you see an extreme order block in a bearish scenario, if you see a lower low, lower high, lower low, and you're looking for your extreme order block at your lower high, but if there's a huge drop, such as a news event, such as anything for that matter, and it's 50+ pips, that extreme order block will not work in the future. It will absolutely not work in the future. And that'll be something I will be just sharing with you guys later on, but that is something so crucial to remember. So crucial, okay? Price can mitigate order blocks more than once, like we talked about. And lastly, extreme order blocks will not always work. Over the next 2 sections, you will learn the powerful reasons and places where extremes work flawlessly and where they will always fail. So as great as extremes are, there, of course, is always a proper place and a proper application, time, where, when, everything that's included with that. So if you don't know how to identify structure or extremes, practice that before moving on. I strongly encourage you, because more concepts does not mean better. Master one by one, and you'll come to realize it will all start to make a very perfect picture. Right now, you are in the infancy stages of learning how to create your own book. By the end of this course, you are going to be a New York Times bestselling author, a mastermind trader, but trust the process, right? So with that being said, everyone, thank you guys for listening to today's video. I hope you had some key takeaways. Share with me in the comments in the Discord what you're, and stay tuned for the next video.